Okay. So this is the statement of cash flows you need to make. Kane Company statement of profit or loss for the year December 32, 2002 and statement of financial position for both years like this year and previous year are given. These are all the elements of income statement. If you have seen this, I'm just scrolling it down. These are the balance sheet elements. Yeah. So there is some additional information given. Dividends paid are this. During the year, company paid 90,000 for a new machinery. That means they bought a new machinery. So now we will prepare like the statement of cash flows. Okay. Please understand how to prepare this. We will start with profit before tax. What is that profit before tax given 392? Let's go ahead. So this is the statement of cash flows. Here you have. So we will write profit before tax, that is 392. Okay. Then to it we will add non-cash items, non-cash expenses like depreciation. Okay. Let's see the depreciation. And again, whenever you are going to see the figure of depreciation in the statement of profit or loss, you should also see whether in balance sheet they have given accumulated depreciation or not. So there is some accumulated depreciation thing given here. Okay. And also the depreciation what they have given is in the income statement is this. So as you clearly know, what we show in the statement of profit or loss is what? Correct or wrong?
Current year.
Correct, na? So this
Yes,
is the
sir.
current, yeah, this is the current year depreciation what you have, what they show in the statement of profit or loss. So we'll take the current year depreciation from the statement of profit or loss, correct? So we add the non-cash expenses depreciation. I have written here. Then again some non-operating nature expenses. So there is a loss on sale of non-current asset which is 18. Again we will take this on operating nature expenses because our ultimate aim is to find operating profit and then operating cash flows. So this is loss on tangible non-current assets we have written here. Now we will again take some non-operating nature expenses if any. So when we see there is in the income statement one of the expenditures like interest payable. This is given in the, because you know whenever you show something in the statement of profit or loss that you will definitely pay at the end of the year. Okay. So 28 is nothing but the interest expense. Again that is also a non-operating nature expense. We will again add that. So here I would write add non-operating nature expense. Why we are doing or why we are giving all these treatments, we have already discussed in our previous class, that is 28. Okay. Now, so we are done with all the non-cash and non-operating nature expenses. Now the next part is we have to see the working capital element changes. So let's see what are the things given. As you know, we have to check the current assets and current liabilities. Inventory was 20, now it is 24. So we bought inventory. So there is a decrease in cash in the current year. We purchase inventory now. So inventory account value increases and cash account value decreases. So for we will subtract. Now trade receivables were this much and now it is this much. That means trade receivables have increased. Did we get money when trade receivable increased? No, but money has gone out because we bought goods to sell them. So what is the difference in 76 and 18? What is the difference? Yes, 18, correct?
Yes.
So yeah, decrease in cash. So increase in receivables, decrease in cash. So 18, decrease in cash because of increase in receivables, and this decrease in cash because we have bought inventory. Now there are no other current assets. We won't take cash and cash equivalents. You already know this. Why we don't take? Because we are preparing cash flow statements. This is what, after making the cash flow statement, we should see whether the current year ending figure is 48 or not. That is what is our aim. Okay. Next. Next, like current liabilities, we would see trade and other payables. We had our trade payables to the tune of 6. Now it is 12. That means we did not make payments to our suppliers or payables. Okay. And we bought the goods from them, but we did not make the payment. So in cash inflow, I mean, so the cash balance is high. It is a positive balance. So 6 difference you need to add. Okay. So till here, I think you have all the clarity, whatever we have done. So now when you adjust, that means you add 318 to 392 and add this and subtract this to and add this, you get somewhere around 540. That is cash generated from operations. Okay. Now the interest expenditure, what you wrote here as a non-operating nature expense, you need to subtract. Why you need to subtract? Because interest paid is a non-operating nature expense, but a pure cash expense. So cash is going out. There is an outflow of cash.
Sir,
Yes.
for this interest paid, this we need to minus na, sir.
That's what we are doing. We are subtracting here.
Uh, Can't we write it like deduct it in like cash flow from financing activities?
See, you have shown this as an operating activity, correct? Here as non-operating nature expense,
Yes,
correct?
yes,
It's
sir.
your wish. If you want to write here, you can write, or if you want to write in the financing activities, you can write. There is no
Means
uh,
problem na, sir.
there is no problem. However, this is going
Okay.
to get deducted now.
Yes, sir. Yes, sir.
See,
Okay.
Avish, because IFRS is flexible in their treatment. As per you, IFRS, you can show. I will give,
Okay.
after the completion of this whole chapter. Last, I'll make you to write some notes. Thereby you can keep a note where what treatment you can give as per IFRS. Okay, I'll give you a small table
Okay,
because
sir. Thank you.
students generally get confused because of US GAAP and IFRS different treatments. I'll give you a note. Don't worry.
Okay, sir.
Yeah. And dividends paid again is a cash outflow. So then again in the question they have given you about the dividend payments. Dividends also we pay to shareholders. So we can write this here and as well as in the financing. There's no problem. But I'm writing here. Again, we can do that. So interest paid, dividends paid, you can write in financing also, or you can write here. There is nothing to worry about this. This is here. And this is a cash outflow. And then again, let us see the tax thing. See, they have given taxation. That means this is the expenditure what they are showing here, correct? But do you think what you show in the statement of P&L is nothing but the cash, like is nothing but the tax which you really paid? Do you think this is the tax you really paid, or you pay the tax as per the what we say income tax returns? Please tell me. This is,
ITR.
yeah, this is income tax expense. We will see what is the amount of cash we really paid. Okay, let us check. So we will make a T-shape account, or we can go for a normal account also. I will show you in both the ways. So where is that? There is a opening balance and closing balance of tax account. Okay, yeah, there is a opening balance. So I will just go for balance brought down. It's a liability. Liabilities always show credit balance. So 86. And then to balance carried down. There we are like 102. Okay. And what is the like tax expense? 124. What is the journal entry for that? The journal entry for this is debit all expenses to P&L. So P&L to or income tax expense to taxation account also we can write. Yes, all of you.
Yes,
Okay.
sir.
Yeah.
Yes, sir.
So yeah. So P&L account to taxation account. So I will write by P&L. How much was that? 130, 124. 124. Can you tell me the difference here? What is that?
The credit side total is 210
Okay.
and the difference is 108.
Yeah.
So 108.
Yeah. Yeah. So this is the to tax paid. So I can say the already now I will show you in normal ways. Already you were supposed to pay this much as per previous year balance. This year you are showing this year like the closing balance you are showing is 102. That means this much is the closing balance, correct? That means this much you are supposed to payable the next year. This is the previous year liability. Okay, and you made a provision of how much? 124. This is what you are supposed to pay. So this is what you are having as a like liability since previous year. This is the current year your statements you have made an estimate of, and it seems this is what you are supposed to pay next year finally. So how much next year? This you are supposed to pay next year. So how much you paid this year? What is that
108.
balance? Huh?
108.
Yeah, so tax paid is 108. That's what. So again, I have come here and I will just note it down, the tax paid thing. And when I adjust all of this, this is my net cash from operating activities. All of you can make a note and do this. I'll go for the other two activities. Fine, fast.
Okay, sir.
Okay, so let's go ahead. Now, see, now we are done with the cash flow from operating activities. The next step is to do cash flow from investing activities and cash flow from financing activities. Okay, let's do this. So see, when you deal with cash flow from investing activities, already we have seen the format. We have discussed earlier that in investing activities, we are going to deal with purchase and sale of non-current assets. Okay. And if there is any investment income which we are receiving, that would also go in cash flow from investing activities. So let's see what is happening in this year. They are giving you some additional information that company paid this much for new machinery. That means there has been some purchase of machinery, correct? So we will see altogether, like we will adjust this. We will adjust this, and we will see what are the changes in the non-current asset account, and we will see what has really happened at the end of the year. Okay. So now let's go ahead and see what are the balances given in the non-current asset account. So we are discussing about this. These are the gross values. This is after the depreciation. These are the net values. Okay. Depreciation we have already shown in our cash flow from operating activities. Correct. Now, so 90 is what you have paid to buy a machinery. Correct. So what is the journal entry for this? Machinery to cash. So cash has gone out. So I have written 90 here. Everyone, please tell me, is it clear to you?
Yes, sir.
Now we will again make this account. We will make this account non-current asset account and see what are the changes which have happened to our non-current asset account. We will take the previous year ending balance. Excuse me. Yeah. So now we are going to take the previous year balance of our non-current asset account. We are going to see what are the sales and purchase have happened in this year, and we are going to see at the end what is the balance which is left over in our non-current asset account, which would help us to decide like sale or purchase at the end of the year. That means we are having a higher balance in our asset account or a lower balance in our asset account. Okay. So higher balance is nothing but we have purchased, lower balance is nothing but we have sold. Let us see. So we'll make a T-shape account again. So this is the balance at the beginning of the year. After adjustment of depreciation, this is the balance at the end of the year. Okay, let us write. No space here. So we will write it here. Buy balance brought down. This is our machinery account. To balance, to balance brought down because it is an asset. Asset always shows debit balance. Buy balance carried down. So your opening balance is 1336. That is the previous year ending balance. And this is the balance you are showing in this year at the end. Okay. Now what has happened? You bought a machinery. So it was machinery to cash. So in the machinery account, I'll write to cash. 90. Okay. So I'll simultaneously make here. This was your opening balance. You bought one more machinery and then your asset has got depreciated, it seems. Okay. This year depreciation is how much? 118. So depreciation to machinery in machinery by depreciation. It's a account which reduces the balance of the asset. So I'll just deduct. And then what is the balance you're getting here? Please tell me. Tally and tell me.
It is 1246.
1246. No, it is 1336.
1336. Yeah.
So we are getting 30 as a balance, correct? So what is the entry for sale of asset? The entry for sale of asset is cash to machinery. So in machinery, buy cash. So can I say this is sale of asset? Yes. Here also 30 balance is left over. This is sale of asset. That means I had machinery of this much value. I just purchased some more machinery this year and my value has increased by this much. The depreciation in the asset has happened of this much in the entire year and my closing balance I'm showing this much, which is creating a difference of 30. That means a higher value I had in the previous beginning of the year, and at the end of the year my value has got decreased. That means I have sold some asset. That asset which I have sold is of $30 value. So this is sale of asset. But see, in the beginning of the question you had one adjustment, loss on sale of asset, correct? 18. That means the asset which I sold, I incurred a loss of 18. I need to adjust and write down the net value. So 30 minus 18 loss is nothing but 12. This is the cash inflow from sale of asset. So this I will note it down here. Okay. Now these two adjusted together gives me minus 78. Please make a note of this. Anyone has got any doubts, you can ask me. I'll go for financing activities.
Sir, can you show the machinery account, sir? So, sir, this 30 is the balancing figure, right?
Yeah, yes, it's the balancing figure. Yes.
Okay.
Okay, all of you done?
Yes, sir. 13.
Yeah. So now we would go for the cash flow from financing activities. It's pretty simple. We will see the finances. The share capital we had of 340, now it's 360. So we raised 20 dollars of capital, like 20,000, whatever you want. 3 zeros you can add. Share premium was 24. Now it is 36. So it has also increased to the tune of 12. So 32. And the long-term loans decreased from 500 to 200. You repaid, that is 300. You need to take a negative balance. So 32 and 300, we can check it out. So this is again done. Please check it. And then you have a like a net amount of this much. When you adjust this and this, you get like how much you're getting, please tell me. 338 minus 78 minus 268. You're getting minus 8. Confirm, please confirm
Yes, sir.
this.
-8. Yeah,
Yeah,
it's
minus 8, huh? And what is
yes.
what is the opening balance of this cash you have in the year? 56. So this is what you had opening balance of, and whatever you adjusted all the, like after adjusting the amount of cash flow from operations, investing activities and financing activities, you have a negative cash balance, it seems. When you adjust it, you get the what we say, that means negative balance is nothing but you paid this much in all and all after adjusting. What is the balance you have at the end of the year now with you? 48.
48.
Okay,
Yeah.
that is what you need to prove, and if that is proved, then your cash flow statement is correct. So we have this. Finish this off.
Sir,
Yeah.
sir, can you explain this cash flow from financing activities once again?
uh, who has a doubt?
I'm Rajeshwari, sir.
Yeah, what doubt you have?
So this share capital is the difference is 20.
Hmm. Then you have premium also, no?
Yes, a premium also 12.
Yeah, so 32.
Retained earnings we will not take, sir.
No. Why will you take retained earnings? That's a book adjustment. That's it.
Okay, okay. Yes, sir. Got it.
You don't pay or receive any cash in that account. No, it's just a book
Yes, sir.
adjustment, just transfer.
Yes, sir. Yes, sir. Got it.
Whatever it happens physically in the cash account. Okay.
Okay, sir.
So I hope you all of you understood this question very properly. So that dividend payment and all we have already adjusted. Now that's gone. So if you are finished, I'll give you one more question to solve. What say? Hello?
Sir, this
Yeah.
long-term loan repaid.
Yeah, you had 500 now, your loans. It has got become 200 now. You repaid 300.
Acha, acha. Hmm. Yes, sir. Got it.
Hmm.
Yes.
So now I am giving you one more question. Okay. And you need to do this. Read this. It's a very big question. Okay, fast. We will do this question like in a swift way. Read this fast. Okay, so hope you have read this, and let's start the question. Fast. Now you should like very actively understand. So what is the PBT we have? 300. I'm taking this profit before tax. Here. Now, next thing, what you have to write is the non-cash expenses. Okay, let's see. What have they given? They gave cost of sales, they gave gross profit, they gave all this, interest received, distribution cost, but they did not give anything regarding depreciation. From where we can get that idea of depreciation, all of you?
Adjustment.
Yes. So you are,
Adjustments.
yeah, adjustments. Very good. So let us see what is the adjustment they have given. Okay. And the depreciation, if it was 290, previous year, and then 340 this year, that means the amount which got accumulated in this particular account, what had happened? See, you know, every year the depreciation, whatever you show in the P&L, gets accumulated in the contra asset account called accumulated depreciation. So what is the difference here? Please tell me. 50? Yes.
Yes, sir. 50.
So most probably, again, there is some adjustment. We'll see. The cost of the on 31st, Emma company purchased a chalk quarry from which extraction will take place for 5 years. At the end of that time, Emma will be obliged to close off the quarry and make this area safe. The cost of this has been estimated and discounted to a present value of this much of the carry and shown as a provision. Okay. So we had fixtures and fittings, original cost this much and carrying amount this much. So how much is the depreciation here?
40.
40, correct? Why? Because this, the value of this has also come down. And here we have 50. So 50 and 40 makes it 90, correct? That is your depreciation. Done. Now,
Sir,
yes, yes.
sir, can you like explain this once again?
Yeah, see your accumulated
Yes.
depreciation
Yes, sir.
account. This is only the information related to property, plant and equipment.
Hmm.
For fixtures and fittings, they had cost, they had bought it for this much. Now it had become this much. So what is the depreciation?
40.
That's it.
So this comes on the credit side, na, sir?
Which credit side?
In the
Like you mean to say you, if
yes,
you make an
yeah,
account, okay,
yeah.
to balance brought down, it is like
Sir,
85.
by balance brought down, na, sir?
Yeah, to balance brought down, no?
Depreciation account.
I'm making, this is
Okay,
45.
okay, okay, sir, okay, sir.
So what is the depreciation which, so if you just do the balancing, so leftover is this. So by depreciation. So you know, like depreciation to fixtures and fittings is the entry. So in fixtures and fittings by depreciation, correct? The balancing
Yeah,
figure.
yeah, yes, sir, yes, sir.
Okay. Yeah.
So once can you show that account?
Fast. You need to do fast. I'm getting shortage of time.
Sure, sir. One.
Okay.
Done, sir.
Yeah. So we have taken the non-cash expense. Now we have to see any kind of non-operating nature incomes are there or not. Okay. So they got this much from proceeds of assets, non-current assets. And interest received, they have given 25. So you need to subtract or not, but no, you need to take this in investing activities. Sorry. You need to take this in cash flow from investing activities. You need to add there. Other things, what they have given is finance cost they have given. Okay, so finance cost is kind of non-operating nature expense. We will, where's that? I think they have taken here. Any doubts? Hello? Hello?
Yes, sir.
Yes, sir.
See, interest paid, you don't worry. I understood what is your query. You may be thinking why we didn't take up. We will take up also. Don't worry. But you know, interest paid is what? It's a cash expense, na? So for that reason, we will deduct here. Okay. Now let's go up. So what we'll do is, again, we have to adjust the interest expense in non-operating activities. We will take that also. So I'm writing here. You can make a note. So all of you, till depreciation charge, everything is all right now. You can take to interest expense. You can take 75. Okay, you can take this 75. You can add this. Why? Because it's a non-operating nature expense. Okay. One more thing. You also received interest. So interest received is a non-operating nature income. You need to subtract it. So we will subtract. So 75. How much is the value interest received? 25 or what? Okay, sorry, it's 25. So what is the net balance here you have? Correct or wrong? All of you, interest paid is a
Yes.
non-operating nature expense. I will add. Interest received is a non-operating nature income. I will subtract. So net is 50 they are giving. If you want to write this as 50, you can write in that way, or you can do one thing. You write to interest expense 75, to interest received 50. Sorry, 25. You write in bracket. Still you will get the same answer. Okay. So these two adjustments are done. That means this is covered up. Now, okay. Fixtures and fittings with an original cost of this much and carrying amount of this much were sold for this much. See, 85 minus 25 is 45 is how much, boss? Correct or wrong?
Yes.
And you are selling it for how much?
32.
So profit or loss?
Loss.
Lost, sir.
That's it. You'll add this. Okay. $85 minus. Okay. The carrying amount itself they have given. Sorry. What is the depreciation? The carrying amount is 45. Sorry. Extremely sorry. I just got confused. See, 85,000 was the original cost of the asset. Now the asset value is 45,000. And the depreciation which has happened is 40,000. Okay. So depreciation, original cost, carrying amount. The asset which is of 45,000 now, you sold it for 32,000. So there is a loss of how much?
8,000.
No. 45 and 32.
Okay.
13,000?
Yes, sir.
Yes. See, 45 ka asset you sold for 32, boss. So the loss is 13,000, na?
Yes, sir. 13,000, sir.
Yeah. So that 13 also adjusted. Okay. So all of you till here, if you have any doubts, you can ask me. I'm just waiting. Yes, anyone has got any doubts can ask me.
Uh,
Yes, yes.
Sir, can you explain this problem once again, sir?
No, what's your doubt?
Very confusing, sir.
There's no confusion. It's very simple. You have profit before tax 300, depreciation charges we have already discussed.
Question I did not understand, sir.
Which one?
Depreciation part.
You should read the question very clearly. Read this.
Fixtures and fittings.
Depreciation, we already discussed about depreciation. Your fixtures and fittings is how much? 85,000. And now the fixtures and fittings have become how much? 45,000. So how much depreciation?
40 difference.
40. And here you have your accumulated depreciation 290 and here 340. So how much amount has got transferred this year?
50.
50. That was related to property, plant and equipment. This 50 and 40 will give you 90. Okay. So here depreciation is 90. Fine.
Yes, sir. Okay.
And then loss on sale of property, plant and equipment. So
Yes.
here things are very clearly given. See,
Yes, sir.
yes, just a second. See, fixtures and fittings is what actually?
85,000.
And this fixtures and fittings have become now, how much they have become now?
Right.
You are selling it for how much?
32.
What is the loss?
45 minus 32. 13.
Yes, that I've taken here.
Okay, sir. Okay.
Now one more thing is there. Okay, we'll do that. See, your non-current investments were of how much? 25, correct?
Yes, sir.
This year you are not showing them in the books. Why? Because you
We have sold them.
sold it for how much?
30.
What's the profit you got?
Okay. Okay, sir. Yes, got it.
Now this profit on sale of non-current investments is a non-operating nature income, correct? So you need to
Deduct.
subtract.
Yes.
So till here everything is all right. Now I
Yes,
will just go for the working capital this thing. Okay.
Okay,
Okay.
sir.
So let us check the inventory thing. Our inventory was 102, now it is 150. So the inventory we have purchased, correct? How much? 48, na?
48. 48.
So cash outflow. So we'll take 48. Now
Trade receivable increased.
receivables 315 and 390. What's the difference? That means our
25.
receivables have increased. We did not get cash, minus 75.
Yes.
Okay.
Yes.
And payables.
Sir, sir,
Yes.
how did you get this decrease in inventories 48?
Decrease in
Inventories.
It was 100 and no, it was not decrease in inventory. Increase in inventory is decrease in cash. When your inventory
Okay.
increases, your cash goes out, na? You pay
Of course,
cash.
yes.
So you deduct it.
Mm-hmm.
We see the inflow and outflow, na?
Yeah, yeah.
Because of the transaction. Okay.
Okay.
Is it clear?
Yes, sir. Yeah.
Now trade payables have increased. That means did you make the payment?
No, sir.
So difference you'll
No.
add back. Okay.
8.
Yeah. Uh,
What's the difference?
8, sir.
8. Okay. Add.
yes,
Yes.
8.
Got it.
So this is all done, and then dividend paid is given. You need to subtract because it's a cash outflow. It's not like when you see the question also things are very clearly given, and then income tax adjustment we need to do. The same account we have to make. So the expenditure for the year we have we have estimated is 140. Already we are having a liability of how much? 110. 110 plus 140 is like around 250, and at the end we are showing our liability as 120. So 130 we paid. Okay. So 110 was already outstanding liability. 140 is the estimation. 120 is again still payable. So we paid how much, boss? All of you.
130, sir.
Tax paid. So when you adjust all of them, you get the cash flow from
130, na, sir.
Yeah, 130. Yes.
So this 120 is?
120 is your current year liability.
Okay.
That means you paid how much?
130.
130.
Okay, sir.
Once all of you, please have a look through this. Then I'll wind up the question.
Sir, will you share this recording, sir?
Yes, I'll share. The recording will be here itself in this Skype.
Okay.
I think there is a share option. I think tomorrow onwards we can do meeting on this also. I think I can share the meeting link. I think there's something there in this. Don't know, this Skype is somewhat old, outdated kind of.
Yes, sir.
But it is like secured, like in court hearings and all also they don't allow Zoom and all. Because anyone can take the files. Here only I can only send. Fine. We won't go for any proceedings. That's understood. Chalo, all of you please confirm till here. If you are done, I'm going forward.
Done,
Yes,
sir.
sir. Done, sir.
Okay, chalo. Let's wind
Done.
up the question. Yeah. Okay. So already we know that we received interest. Okay, other income. So that we will add because it's other income. Because it's like investment income. Okay, it comes in this.
Okay, sir.
And you sold the property na for 32. That also cash inflow you got. That also we recorded. Okay.
Yes.
And
Investments. So
yeah, you sold non-current asset investments also. So that also we recorded. Fine.
That
yes, sir.
25 shown 30. Yeah, correct, sir.
3 things we have adjusted. And now let's make the account and see the like after like buying and selling sales whatever has happened in this current year. Let's see the final balance. Okay, what we are getting, let's tally
Yes.
it. So we are getting this final balance, let's tally it. So we'll make an account. They have all gone with a complicated explanation. So see your balance brought down, like I'll just make a account. So your asset is of how much? 305 and ending balance is 380. Okay,
Yes, sir.
I'm not wrong. I've written the correct thing. Yeah. And what has happened is in fixtures fittings also we'll adjust in this in property plant and equipment or what, because yeah, see, fixtures and fittings had an original cost of, just a second, following information relates to property plant and equipment, and non property plant and equipment. Okay, this has an inclusion of fixtures and fittings. Understood?
Yes, sir.
That inclusion is there in the PPE only,
Okay.
because separately they have not given any PPE account. So you sold how much of this?
45.
85,000 something part of asset you sold, correct?
Yes, sir.
What's the entry? Fixtures and fittings, cash to fixtures and fittings. So
Cash.
by cash. Okay. However, if you write the depreciation here, then it is better like what was the original value of that? 85, correct?
Yes, sir.
And what was, because I'm not making a separate account, I'm doing an inclusion of this in this. So what is the value they showed?
45.
So this is the depreciation, correct?
Yes, sir.
So that this also they will be having.
By
So
reference.
no, just a second. They sold it seems, or they have this in the like what we say in the asset value. They at
32.
the end sold it seems. Okay,
Yes, sir.
they sold it for some amount, and profit or loss we have already included in the cash flow from operating activities. So when they sell it, what's the entry for sale of asset?
Cash account
Cash
to
to fixtures and fittings. So in fixtures and fittings, can I write by cash?
yes, sir.
Yes, sir.
I can write now. So this asset is sold completely. Okay. The profit or loss is already adjusted in the statement of cash flow from operating activities.
Yes, sir.
Now, what is the depreciation on asset? Asset to like depreciation to asset, correct?
90.
Yeah. So fixtures and fittings is also a part of your property, plant, and equipment. So we'll take the depreciation here. So by depreciation, 90. See, please understand very easily. The things can be like understood, and it's very easy to understand even. Okay. Fine. Okay. So on 31st December, Emma Company purchased a chalk quarry from which extraction will take place for 5 years. This is a non-current asset. At the end of that time, Emma Company will be obliged to close off the quarry and make area safe. The cost of this has been estimated and discounted to present value of this. That means today the present value of that quarry is 40, which is included in the carrying amount of quarry and shown as provision. So can I say this is the purchase of asset? So entry is like
Asset account to cash
Purchase.
account.
To asset to
asset,
purchase.
yeah, asset to
Asset to
like
cash. Cash.
cash, correct? So
Yes,
in
sir.
asset account, can I write to cash?
Yes, sir.
Yes, sir. To cash.
Purchase.
So that is like 40, correct?
Yes.
See, your assets, the thing is, it's something not strange in this question. A new kind of thing is given regarding the revaluation gain, and this won't come in the other activities. We need to adjust this with the asset account, correct?
Yes, sir.
So it's a balance sheet item. So your asset has increased by 9, it seems, and that has to be debited to the asset value. So asset value would increase, correct or wrong? So what will be your entry? Your
Cash.
entry would be asset account debit
Evaluation.
and to revaluation surplus, correct?
Yes, sir.
100 and to your like, so revaluation surplus is 9 actually, and your asset account is also debited by 9. Okay, so this much of this has gone, and your asset would increase by how much now?
9.
So that would be added to your asset value. So to revaluation gain, can I write here in the debit side?
Yes, sir.
Yeah. So in US GAAP, there is no chance of upward revaluation. Only downward revaluation is considered. Okay. Can
Means,
you
sir.
just, sorry?
Means, sir.
See, they won't consider the upward increase in the asset value in US GAAP.
Okay, sir.
Only the asset value which falls is considered. Okay. Don't worry about US GAAP. This is IFRS.
Okay,
Now
sir.
tell me the balancing figure.
The credit side total is 515. Balance is 161.
So this is like by
So credit
cash.
side total is 1515, sir.
Yeah. So asset to cash is going to purchase. Here it is sales, na?
So to the
Sales.
debit side, sir.
No,
Debit
no.
side.
If we purchase the asset, it is asset to cash in asset by purchase. Okay. By cash, it is purchase of asset. So how much asset you have purchased? 161, correct? So
So
161
sir,
outflow.
sales means we will write on the credit side, purchase on the debit side, now, sir.
Please don't make these kind of rules in your life. You do the journal entry thing. If you like keep these things in your mind, debit we write this and credit we write this, you'll go wrong.
But the
What is the
balance
entry?
is coming on the debit side, now, sir.
Which one is coming in debit side? I'm asking this. Where is this coming?
161 on the debit side, sir.
So tell me that. Okay, you told me I wrote it there. What is the total? Can you tell me the total completely?
515, sir. Credit side
Which side it is
515.
coming? Okay, so you told me I wrote it here. I did not total, na?
I'm sorry, sir.
No problem, no problem. I got confused because I didn't knew the total. I'm not
Mm,
calculating. I'm leaving it on you. So you should have told me, sir, credit side total is 515. It's a higher total. So here
mm,
it is balancing figure is how much?
161.
So have you done the collection like all the things correctly, na?
Yes, sir. Yes, sir.
So what is the entry for if I get a cash balancing figure here? So it is PP2.
Cash.
So I
Chest.
purchased asset or I sold asset.
Chest.
That's it. That's what I'm saying.
Hmm.
So
Yes, sir.
this is what is done. 161. Okay, I already adjusted.
Okay.
And we will also check the intangible assets. There is intangible asset in this. It was 200, now 250. You purchased it. So again, subtract 50. Done with your cash flow from investing activities, and the balance is here. Finish it off fast. See, just see this, then I'm going for the last activity. And then one homework for you, all of you. Take a
Yes, sir.
screenshot of that and do it at home. Done with cash flows. Tomorrow be ready with the preparation of financial statements. Okay. Okay. So now let's go for the financing activities. So your share capital is 150. Here it is 200. So you have raised capital or not? So cash inflow, correct? And your share premium has also increased. So again, 10 also you need to add. So it is 60. So 60 you got cash inflow. Next point. Then there's a long-term loan. Okay. So it was 50. Now it is 130. So you have taken loan or not? Of 80 you have taken. So that again you need to add. All of you, are you following? Hello.
Yes, sir.
Yeah, all of you are following.
Sir.
Correct. Yeah, yeah. So then again, these two you added here. So 48 and this when you adjust, you get 64. And let's see. What is your cash account? You have cash and cash equivalent of this. Again, you have a bank overdraft even. Okay. So this bank overdraft and this. So 98, you had cash this much and you were having a payable of this much. Payable of this much. So you need to, then you have this 50 cash and short-term investments. So 52. Just a second, I'm just doing some calculation. Okay. So here it is 1 and 2. That means your cash, you need to get this. But instead, you have a liability, you have a bank OD of this, and you have short-term investments of this much. So 52 and 85. What is the difference? Can you tell me? Yes, Rajeshwari, what's the difference? Hello.
Sir, 33, sir.
33. And so this is what? See, your cash and cash equivalents net. Net, I am saying. Net is how much? 85 is your bank OD and 52 is your cash and cash equivalents. Okay.
Yes, sir.
So your net balance is a negative balance. Still you are supposed to pay. That's a overdraft. Okay. So we take that here.
Okay, sir.
Where is that? Yeah. So there is a overdraft balance. Okay. So
Yes.
how you got this? Minus 52 and 88.
85, sir.
85. And then this one. So you had this much in the previous year and this much OD. So net balance is again 97 payable, negative balance. So you, after adjusting 48, 124 and 140, you got 64. 64 and 97, when you adjust, you get 33, the closing balance. And hence your cash flow statement is correct. Okay.
Okay.
Please have a look through it and then take the screenshot of next question.
Okay, sir. do we have today class at 9?
No, cash flow statements like today we are winding up, na?
Yes, sir.
Then we will take the financial reports class tomorrow.
Okay.
So that would be
Okay.
the last chapter which I'll be covering in the F3 and F7 combined.
Okay, sir.
We will be doing now 1 week I'll be continuing with financial statements only,
Okay, sir.
whereby I'll be taking I'll be teaching the chapter, and also I'll be like explaining 5 big questions. Okay.
Yes, sir. Okay, sir.
So then you should get an idea how to prepare a statement on your own, and every day I'll be giving you one statement task.
Okay, sir.
Fine.
Yes, sir.
So this is done. Take the screenshot of this question. Just take the screenshot, please. Okay, I'll just take the screenshot of this bigger picture. You can zoom it and do it now. Are you taking the screenshot?
Yes, sir.
Yeah, please.
Yes.
Yeah, you can then just zoom it.
Done, sir.
Yeah, then this. Not an easy one, huh? Let me see how you put this. For F7 people, cash flow statement is not a chapter in the essay question, but you should know how to do. So do it.
Sir, essay consolidation may come, sir.
Yeah, consolidation, ratios, and preparation of financial statements. So now tomorrow onwards, my focus would be on preparation of financial statements. Okay, and
Okay.
then we'll do the ratios also simultaneously in the evening.
Yes, sir.
Sir, can you
We
go up,
have
sir?
to do 10 questions of these 2 chapters. Yeah, hello.
Yes, sir. Can you go up, sir?
Yeah. वो photo रहेगा ना? You can use it in the group.
Yes, sir. That one will be in group only, sir. This one.
Yeah. Okay, then see all of you tomorrow at 4 p.m. same time. Okay.
Okay, sir.
Yeah.
Yes, sir.
Thank you.
Thank you,
All of
sir.
you. Bye
Okay,
bye.
sir. Thank you.
Bye, sir.
Thank you.
Bye.
Bye.